Former Co-operative Governance and Traditional Affairs Minister Sicelo Shiceka and Public Works Minister Gwen Mahlangu-Nkabinde have been given only 3 months to vacate the official houses they were using in Pretoria and Cape Town. And more South Africans are finding it difficult to make payments on their home loans due to the tough economic environment. I'm Richard Brooks. Former Co-operative Governance and Traditional Affairs Minister Sicelo Shiceka and Public Works Minister Gwen Mahlangu-Nkabinde have been given only 3 months to vacate the official houses they were using in Pretoria and Cape Town. The Public Works Department has told the SABC that the 3 months notice is a normal period given to any minister and member of parliament who is no longer serving in the government. Shiceka and Mahlangu-Nkabinde were both fired last month by President Jacob Zuma in the latest cabinet reshuffle. Abungwe Kubukana has more.
Both Shiceka and Mahlangu-Nkabinde are no longer in the executive but remained members of parliament. The Public Works Department, which is responsible for the accommodation of cabinet ministers and parliamentarians, has confirmed that it has given Shiceka and Mahlangu-Nkabinde a chance to sort out their personal belongings before relocating to their new homes in the parliamentary villages in Cape Town as members of parliament this time around. Department spokesperson Tamika Mchunu says the department is busy looking for new accommodations for the two MPs to avoid unnecessary long stays in private places at the taxpayers' expense. Abongwe Kobogana, SABC News, Parliament.
More and more South Africans are finding it difficult to make payments on their home loans due to the tough economic environment. The country's housing market has remained muted for most of this year, and property owners are finding it difficult to sell their houses at asking price. Economists expect the housing market to further decline over the next 2 years. Absa Bank property analyst Jacques du Toit blames the uptick in inflation for eroding consumers' spending power.
Recently, we've seen house price growth coming to very low levels compared to what we've seen in previous years, and especially on a month-on-month basis. And in certain instances, prices were actually declining, to a large extent against the bigger and the larger background of economic developments having an impact on the consumer out there. The expectation is for house price growth to remain very low towards the end of 2011 and also into 2012.
The rand has lost further ground this morning. Standard Bank's economic unit says that the currency is likely to remain under pressure, as was the case all of last week. The unit attributed the currency's volatility to the continued turmoil in global markets. Government bonds were also weaker, with the latest data showing foreigners have sold local debt in the past week. Tradition Analytics says the current turmoil on financial markets are due to poor management of the major developed economies of the world, over which South Africa has no control. It says this is dealing a blow to local growth and inflation through the sustained weakness in the rand. The US dollar is trading at R8.25, sterling is worth R12.99, and the euro is worth R11.13.